It's not what you did, son, that angers me so. It's who you did it to.
Yo guys, welcome back. Welcome back. I hope you had a good trading week last week, okay? So today I'll be just taking you through a trade which I took on last week on Wednesday, okay? So let's just get straight into it and waste no further time, okay? So what we did last week is that we started off from our weekly time frame, okay? Because why? We need a high time frame key level to trade from, okay? So firstly first is that I went ahead and marked this fair value gap on the weekly time frame. As you can see that this is a fair value gap over here, okay? Same thing here on the Nasdaq. We had a fair value gap over here, okay? This is the S&P 500 here down here, and this is the Nasdaq over here, okay? So as I marked off this fair value gap, I hope you can see the differences between these two, okay? There is a cracking correlation between Nasdaq and the S&P 500, and I hope you can see it clearly, okay? The Nasdaq failed to tag this fair value gap over here, okay? But on the S&P 500, we did tap into this fair value gap right over here, okay? So this over here is a cracking correlation over here, okay? So this was our first cracking correlation, okay? So now we want to go on our daily time frame since we already have a key level on the weekly time frame, okay? So you need to wait until the market first come and tag your key level for you to be able to get a trade. So you won't be trading over here unless if you want to trade towards the key level. But I recommend you to trade away from the key level since it is more easier, okay? So on our daily time frame, we can see that, let me just zoom in. We have another fair value gap over here on the S&P 500, okay? Right over here. So I can go ahead and delete this one on the weekly time frame. We already know we have tagged this one. Okay. So on the S&P 500, we had a fair value gap on our daily time frame again. So we can go ahead and delete this one, this weekly fair value gap on the Nasdaq. Also, we know that it was not tagged. Okay. So right over here, we had no fair value gap here on Nasdaq. Okay. We had no fair value gap. Can you see over here? We had no fair value gap, so we cannot draw our block. Okay, there was no fair value gap over there, but there must be a key level where the Nasdaq went ahead and stopped. Okay, which is this order block over here. Okay, as you know that the market only does two things. It moves from internal to external, or from external liquidity to internal liquidity. Okay, so from here, this is an internal liquidity over here, which is a order block. An order block is an internal liquidity. Okay, same thing here. This fair value gap over here on the S&P 500 is a internal liquidity going towards a external liquidity, which is the one over here. Okay, which is, this is our targets over here, which was taken out. Okay, same thing here on the Nasdaq over here. This is our target over here, which is the external liquidity right over there. Okay, so I hope you got that. So what we want to do is we want to take it from this point over here. Okay, so can you see that we had two fair value gaps? This was the first one over here, plus we had one over here. Okay, on the Nasdaq we also had one, over there, right over here like this. As you can see that the Nasdaq failed to take this one again, but on the S&P 500 we did take this fair value gap over here on the daily time frame. So this is another cracking correlation, okay, which is supporting our bias, okay. So that was it on our daily time frame. So on our daily time frame, we know that Monday opens over here, okay. We want to trade towards this fair value gap over here because this is our key level, okay. So as this is our key level, we want to trade either towards the key level and away from the key level. As you can see that we created a cracking correlation over here, right over here, okay, going towards our key level. So this was a precision swing point right over here on our daily time frame. As you can see, this candle was a down close candle on the Nasdaq, and on the S&P 500 this was an up close candle. So this was another cracking correlation to support the trade going down. So you could have traded downwards towards the key level and upwards away from the key level, okay. So that was it on the 1 day time frame, okay. So now what we want to do is that we want to put our indicator right on, okay. So let me just, yes, like this, okay. So first we want to focus on our monthly, okay. This one over here is our monthly, okay, monthly. So we have 4 weeks in a month. As you know, that the month of April has ended, I think it was yesterday or 2 days ago, okay. It ended on Thursday, okay. So I want to divide my month into what, into 4 equal parts, okay, but I won't be doing that, and because I want to focus on the previous quarter, okay, in the current quarter which we were in, okay. So this over here was, we had Q1 over here, Q2, this is Q3, and this is Q4 right over here, okay. So let me just go ahead and put these demonstrations tip over here so that you can see clearly, okay. Yes, it is on right there. So we had Q2, 3, 4, and Q1 was right over here, this side, this gray part over here, okay. So between Q3 and Q4 we had a cracking correlation over here, okay. So I want to go ahead and mark off this lowest close over there, okay. Same thing on the S&P 500, okay. You need to mark the body closures, okay. So that's what I did between these two. On the Nasdaq, we failed to close below Q3's lowest closure, okay, right over here. We failed to close below. But on the S&P 500, we closed below the slowest close of Q3, which is the previous cycle. Sequential SMT needs to happen between 2 consecutive cycles, okay, or quarters. So this is Q3, Q4. So this over here is sequential SMT over here, okay. This is sequential SMT. So let me just put in a, this was the lowest low, which is the lowest week, but we don't focus on weeks because weeks does the damage, okay. We want to focus on the body closures, okay, which we had right over here, okay, which we had right over there, okay. So first is that we have a monthly sequential SMT, okay. We have a monthly sequential SMT. Okay, let me just remove this order block which I drew on the one day. Okay, this is sequential SMT right over here. Okay, going down below this point, we had a fair value gap over here which was tagged right over here. Okay, right over here. And where did the Nasdaq stop on our order block on the one on our daily time frame? Okay, so that was it on the. We know that we have a monthly sequential SMT, so we want to drop down to our weekly sequential SMT, which we will be using our 1 hour time frame. Okay, I hope this is not yet confusing. Okay, yes, right over here. So on between the Nasdaq and the S&P 500. Okay, so this is the last week of the month over here, this blue area over here. The last week has 4 quarters. Okay, but here we have 5 quarters because the week has 5 days, but we do not actually look at the last day. Okay, but it's also part of the quarters. Okay, but we have 4 quarters. As you can see, this one was not given a color right over here. Okay, you can see that we have this gray, this red, green and blue, and this white over here is the Friday. Okay, so let me just go ahead and divide my days into 4 equal parts. Okay, 4 equal parts. Let me just change this color to indicate that this is our. Now we are dealing in Q4. Since we are in Q4, Q4 is divided into 4 parts as well. Okay, into its quarters. Okay, so this compromises all from the weeks. Okay, so this over here was Monday, Tuesday, Wednesday, Thursday, and Friday over here. Okay, so we had that in place. So now can you see that once when I say that you can trade towards the key level, you can trade towards the key level. We had sequential SMT over here. Okay, we had sequential SMT over here. This was a weekly sequential SMT. Okay, this was a weekly sequential SMT right over here. As we can see, on the S&P 500, we closed above. Okay, failing to do so on the Nasdaq over here. Okay, so this was sequential SMT to trade towards the key level. So once this trade hits your key level, you want to exit the trade. Okay, that's what happened over here. Why did the Nasdaq stop over here? It stopped now daily order block over here. Okay, but then S&P 500 continued to go down because it was chasing this fair value gap over here. Okay, so I hope you got that in place. Okay, I hope you got this. So we took trades last week on. I don't think we took it on the index futures. We took it on the FX Traid. I took it on Euro USD. Okay, trading towards a key level, right? So now from our key level, we want to see sequential SMT again. Okay, which we had right over here. Once this key level was hit right over here, we had sequential SMT right over here. We had sequential SMT right over here. Okay, you can see that the Nasdaq failed to close below, but on the S&P 500 we closed below, and once we close below we tag this key level over here, which is our fair value gap right over here. Okay, right over here. So your trades, you should have taken your trades on Thursday. Okay, this was a key day. Why? Because we had a high impact news on Thursday and Wednesday. Okay, on Wednesday we had FOMC over here, and then on Thursday also we had a high impact news over here. Okay, so can you see how the things were aligning with each other? Okay, can you see how things were aligning? So from this point over here, I'll be ending this video soon. Now we want to go in our daily, because this is one day, so we want to see how we took this trade right over here. So I'll be just taking this to consideration. We know that we had a weekly sequential SMT, which was the low of the week. Okay, now I want to go to my daily quarters. Okay, on my daily quarters I can see that we had sequential SMT between Q2 and Q3. Okay, so can you see where we created this low? We had sequential SMT between our daily quarters. Okay, so this was the Asia session, London session, New York session, and New York lunch, and this is where we took our trades from this PSP, precision swing point, right over here. Okay, and then we just held our trades all over. Okay, so I just want to show you, this is where our executions were. Okay, we took our trades right over here, close partials here, partial there, and a partial right over there. Okay, so this is a trade we took last week on the index Traid. Okay, so I hope you took down some notes over here. Okay, this low over here was created by a precision swing point. As you can see, this was a down close candle here on the Nasdaq, and over here on the S&P 500 was the up close candle here. Okay, this candle right over here. So this is where we took our trades last week, and the market just shot up. Okay, then on Friday we had a continuation again, but I won't be doing this right now because I've been here for almost enough time. Okay, so this was just a simple trade breakdown to see how the market actually played last week, and how you could have aligned yourself with this trade last week. Okay, now I just want to show you something over here, that we had a order block right over here which was tagged over here inside this key level over here. So let me just remove. I think I can remove everything on this chart right now. So where did the S&P 500 stop? In a fair value gap, and inside the fair value gap we had a key level over here. Just check over here. We had an order block over here, this down close candle over here, plus a fair value gap over here. So you could have taken your trades right over here, creating sequential SMT, going into a key level right over here, taking your trades over here, held it all the way up, knowing that you need to take out this external high. Okay, so that is it, guys. I think I've overstayed my welcome, and I'll be seeing you next week. Okay, I hope you enjoyed and took some notes over here. Okay, hope you have enjoyed your weekend and your holiday. Okay, see you next week. Bye.